Well, the nice improvement that we saw in rates last week did not last. We are sitting right at 7% in the Mortgage News Daily Tracking. Let's talk about it. Today is Thursday, the 20th of July. Hope you're doing well. This is Lance Bryce with Thrive Mortgage. And as stated, we are sitting at 7.00% in the Mortgage News Daily poll. Last week, we were an eighth point cheaper at 6.87. 30 days ago, exactly the same, 6.87. If you look at the Freddie Mac poll, I think that's probably closer to where folks are going to be pricing loans today. 6.78 is where Freddie has it. Mortgage Bankers Association has the 30-year average at 6.87. And of course, those two polls do not exclude points. They factor in the fact that borrowers have paid some points to get those rates, and they kind of ignore that data. That's why those rates are going to be lower in those polls. Most buyers do, in fact, pay a little bit of discount to get a better rate, because right now in an escalating rate environment, y'all, paying discount points yields a huge benefit, far more than it typically does. You would normally see a point of discount reduce a rate, maybe an eighth to a quarter, most often a quarter in a normal market. But in an escalating rate environment, those points become far more precious. And you can see a point paid reduce a rate, a half point, maybe 5/8 of a point in rate, which is a very short rate of return on those points paid. So if you're wondering why you're seeing so many discount points being quoted to your borrowers, that's the reason why. There's just huge bang for the buck right now in buying points. Except for last week's blip lower in rates, y'all, we have seen rates remarkably flat over the last 2 months. And again, they've been flat at these elevated levels due primarily, in my view, to the debt deal that was negotiated and the next 4 years of deficits that we have essentially enshrined with that legislation. A reminder that we take in a little bit less than $4 trillion a year in revenue by the IRS, and yet we have committed through that debt deal to 4 years of spending in excess of $6 trillion a year. Well, those deficits have to be financed with additional debt issuance, and I think that's why you're seeing such stubbornness with interest rates, even in the face of really good data on inflation like we had last week. It's going to take a significant and a prolonged period of time of prices moderating before we see that change, folks. That's just the way that this works. You can't have that much debt without having the consequence of higher rates, and that's what we are seeing. So let's look at some housing data, because this is also driving some of what we're seeing the bond market do. Existing home sales are down 3.3% in June. That's a little bit more than expected. That's a little bit softer than predictions for June sales. Year over year, home sales are down. Existing home sales are down almost 19%, 18.9% year over year. The issue is not that we don't have willing buyers. The issue is that we don't have willing sellers. This is very much a supply-driven problem. We are still only seeing 3.1 months of houses on the market nationally. Remember that 4.6 months is normal supply. So we are well under where we need to be as far as supply of homes. Average time on market is 18 days. So we are still seeing nationally a very tight market. Now, I will say that just anecdotally at the local level, the San Antonio market, the South Texas market that I'm closest to, I am seeing seller concessions on more of the offers that I'm seeing accepted. I'm also seeing reductions in sale price, and I'm seeing fewer multiple offer situations. Now, I'd love to hear what y'all are seeing, because again, my observations of the market, not a big enough sample to really determine if it's a market direction, but I will say I've seen offers accepted, several, in the last couple of weeks that would have never been accepted 10 months ago or even 3 months ago. So I am seeing some softening, if that is any indicator. Would love to hear comments from y'all if you're seeing something similar in the local market. My gut is telling me we're seeing a softening at the local level. And again, would love to hear some more examples that might either support or dispel that notion. So this is kind of a plea for data. Y'all respond to this video and let me know what y'all are seeing, and I will share the results of that on the next call. In any event, I hope this is helpful for you and for your clients. You've got all my data on the screen. We're honored to have your referrals. Stay blessed, stay safe. We will talk to you next week.